Hello and welcome to Ticker Tapes. Today, we're taking a look at the world of high-growth stocks. In a very tough week for high-growth stocks, Airbnb surprised on the upside when it reported Q1 earnings. The lodging app that matches rental accommodation owners with tourists and business people looking for a place to stay posted Q1 EPS of -3 cents, a loss, but a far smaller one than Wall Street was expecting. Analysts at banks and brokers had predicted a shortfall of 29 cents per share. Airbnb also reported gross booking values up 67% to $17.2 billion, and that more than 100 million nights and experiences were booked through the platform in Q1, its busiest ever period. Activity that generated $1.5 billion in revenues for the business. Management felt able to guide higher for Q2, raising its revenue target north of $2 billion and ahead of consensus forecasts. Despite the good news, the negative sentiment, seen late last week, prevailed and Airbnb stock was lower by 11.34% over the last 5 trading days. CEO Brian Chesky, who recently said last week that the firm's employees can work from home forever, explained that decision in an interview with Time, saying that the office was an anachronistic form that's from a pre-digital age, adding that, "I think that the office as we know it is over. We can't try to hold on to 2019 any more than 1950. We have to move forward." I think that for somebody whose job is on a laptop, the question is, well, what is an office meant to do? Another high-growth name reporting earnings last week was Block Inc., the owner of payments platform Square. Earnings were mixed, with revenue of $3.96 billion versus estimates of $4.61 billion. Against that, gross profits grew by 34% year over year to $1.29 billion, and the recently acquired Buy Now, Pay Later service, Afterpay, contributed $92 million to the gross profit figure, whilst Square Cash App generated $624 million, an increase of 26% compared to its Q1 21 gross profits. Block Inc. stock initially traded higher on the earnings release, however, it couldn't escape the sharp sell-off seen on Thursday and finished the week down by 3.37% and back below $100 per share. The picture for growth stocks year to date is pretty ugly, with the NASDAQ 100 index down by 22.22%, though interestingly, not every stock in the index is in negative territory year to date. For example, Activision Blizzard is up by 17% in 2022. The game developer is the subject of a takeover bid from Microsoft. The $68.7 billion all-cash deal, which valued Activision at $95 per share, seems likely to go ahead, though it may not close before 2023. How intriguing, then, that value investing supremo Warren Buffett should add to his stake in the gaming company, topping up his holding to 9.5% of the business, with Activision stock trading at an $18 discount to Microsoft's offer price. Perhaps he thought it was just too good an opportunity to miss.